Now let's get to why so many people prefer Streamlined. It's cheaper. Here's what's involved. First of all, the Streamlined is available to U.S. taxpayers domiciled in the United States or expats offshore. It's available if the IRS has not opened an audit. It requires 3 years of amended tax returns and 6 years worth of FBARs. That's a lot better than 8 years of amended returns and 8 years of FBARs. You'll pay a 5% penalty if you're a U.S. domiciled taxpayer, and you could potentially pay a 0% penalty in specific circumstances if you're an expat. Expats must meet a residency test for 3 years to qualify for a Streamlined. This basically requires them to have no U.S. abode and to have spent 330 days of each tax year offshore. Again, if you qualify, there'll be no FBAR penalty. Let me just say this, there will be tax liability in most cases if you haven't filed in the U.S. Think about this, if you're in a country that doesn't have a totalization agreement with the United States, that means any income you earn offshore that's even excluded from taxability under the foreign earned income exclusion is still subjected to self-employment taxes in the United States, which can be 12.5% of your offshore compensation. Additionally, if the offshore tax rate is lower than the U.S. tax rate, you at least owe the differential between the foreign rate and the U.S. rate, even with the benefit of the foreign tax credit. Meaning, if you're in England and they have a 20% tax rate and the United States would have been a 30% tax rate, you'll pay 20% tax to England and 10% tax to the United States.